well. And I think we are on. I think our stream is on. Everybody, we are using a brand new platform, StreamYard.com, okay, with pretty much like shooting and then streaming all the webinar today, okay? So I hope you bear with any technical issues if they may arise at one point. Yeah, so it just seems yeah, it just seems like, guys, let me know very quick in the comment if you can hear me, see me okay, just for the clarity, so that we can kick it off and go properly just like we should, okay? Let's check it. Okay. So I'm not sure if this is okay. Mic check, perfect. So there seems to be some couple of seconds of the lag, which is not worst at all. Okay, let's make sure to kick it off, guys. Listen, today's webinar. Okay, today's webinar is very special one for many reasons. Okay, and as you may have seen, the title for that is the very title for that is when should you leave crypto market for the other markets? Okay, that's what I pretty much like want to talk to you about. But before I do talk about, I want to make sure to give a brilliant shout out to all of our partners, okay, so that we can ensure they're put in the best spotlight that they deserve. Let's give it up, and then we're going to proceed with that stream.
PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXPT in minutes.
Ferrum Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit theburpnest.com/Ferrum. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at theburpnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at theburpnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit theburpnest.com/YFDAI.
It's pretty awesome. It's pretty awesome. We have grown so much as the brand. That is the Burp Nest. We have so many partners. We have recently really pumped up on all of those reputation. We are really, really popular, right? So it is very good. Everybody, let's go ahead. Listen, today's stream, as I said, is going to be mainly about different approaches on how to practically predict, or should I say, use the technical analysis and other forms of analysis and market analytics, like on-chain analysis, okay, fundamental analysis, technical analysis, sentiment analysis, okay, and whatnot, intermarket correlations, to time your way out of the market. Okay, because many of you are actually just joining late right now. Many of you are joining very recently. Okay, and the truth is that those who are joining right now, they are joining late. Okay, they are joining late. This is a fact. This is not my opinion. We've been in a bull market since 2018 reversal. Okay, so give it a 6 months more from now, and we are going to literally have 3 years of the bull market. That's a long time. Okay, so if you are joining right now, you've missed already 3 years of the bull market, almost, or 2.5 years. So that is the first fact to acknowledge. Okay, that is the first fact to acknowledge, and your reality kind of like check needs to be real. Okay, needs to be real. I mean, there are so many perception biases which would make us think that we are joining, that we are the best traders, that we are literally just, just join the party and we can trade because we knocked out the very first trade nicely. Okay, we grabbed some profit and whatnot. But the truth is, it all shows in the perception biases. Okay, when we lack knowledge, it's like when you just join, sit at a table, at a poker table, and you never played poker before. Okay, Texas Hold'em or whatever, and you somehow win. It's not You didn't win because you were the best trader or the best, should I say, poker player in this very context, although it's almost the same. Okay, instead it means you were, well, at your best, as you will, lucky. Okay, and luck, truly speaking, is a coincidence of many different encouraging, conditions for you, situations, right? But this luck, by definition, is luck because it's very scarce. Okay, it's called luck. It actually happens for you to be lucky, not on a daily basis. You cannot win the poker play, let's say the poker tournament, okay, by being lucky. I promise you that. You cannot, drive a race car, let's say, like a race sports car with having no driving license, okay, and then survive for your entire life, okay, because, well, luck is something that comes and goes very easily. Okay, and if you base your all your trading strategy, if you base your money, if you base whatever you do based on luck, okay, you literally give the luck the biggest credit and the biggest reliability, then I promise you are going to fail over the time because statistics and odds are against you. Okay, so again, the very message, okay, I'm starting this very stream with, is so that you acknowledge that if you're joining right now, if you just joined the market, you joined late, about 2.5 years late. That's quite a serious period of time. Okay, knowing that before actually we open up some charts with Bitcoin, knowing that, well, typically the bull markets last 3 to 4 years for Bitcoin. Okay, so we are, well, more often than not, it's 2011 that we saw the peak. Then we saw 2014 the peak, 2017, 2020, 21. Okay, so there is 3-4 kind of like year distance, or should I say the time period, the cycle. That's how long it lasts. Okay, and you're going to see and hear many fake gurus, okay, on the internet that would try to literally just tell you that you can achieve anything, that you just need to buy some shit coins, buy some certain shit coins that they would show, and you'll be all set, that you don't need to pay attention to risk management. This is all bullshit. Okay, there are many fake gurus, so don't like, make sure you don't fall that. Okay, don't fall for all this shit. Instead, like just like a couple of comments, just so I can already read them. Okay, those comments say that you know you come here for the truth. At times I'm very straightforward, and that may hurt many people. Okay, but usually people don't like to check the reality, because we exit our own comfort zone, our own imagination, delusional bubble, and apparently it happens that we make mistakes. Okay, factually, it happens that we are faulty, that we have also, apart from the strengths, we also have the weaknesses. Okay, and those weaknesses is exactly what people are most afraid of. People are afraid of being weak. Okay, that's our kind of like a natural weakness. And the truth is, this weakness can serve and can turn into your strength at one point, depending on the context. Tell you an example. This is a private example of my private life, right? I'm bald. I'm hairless. The other day, I have very long curly hair. I was literally like, when I was singing in the band the other day, I had this dress up kind of like a concert, and I literally dressed as an angel, like with this white wings made out of cartoon, cardboard, as they say, and like those white white clothes. And I was very concerned about me losing the hair, and over some time, like this, of course, was my weakness. I consider that my weakness, but over the time, this weakness kind of like became part of my image. because the part became part of who I am, right? I'm never shy about that anymore. Not only got used to that, but I made my biggest weakness, my biggest sort of like a fear, I made it my own strength. And that is exactly the same. This is exactly the same mechanism that turns you into a profitable trader. Okay, into profitable trader. And you have to acknowledge your weaknesses. You have to understand them. You have to know yourself. Okay, and by knowing yourself, I mean just listing all your strengths and weaknesses, making some psychological tests. Okay, impatience can be also, I'm a very impatient person, right? Whenever I work with my team, I very often want things to be delivered very fast. Okay, lightning speed, and to be a high quality. Okay, at one point, in one context, it may work fine, but in the other context, when I rush on trades, I can lose fucking money on that. Okay, so the same impatience is the feature. The features apparently are to some extent neutral, maybe, right? At least in some cases, and those, depending on what context you put them in, okay, they are literally going to serve you as your strength and weakness. And this does not only correspond with you in general, this corresponds with you as a trader. Okay, so the reality check, that's why you guys are coming here. You're not coming here to listen to some bullshit. You're not coming here, okay, to like be spoon-fed. Okay, you're coming here to actually change your mindset on how to become a profitable trader. That's a goal. And if you're not serious about this money, this is not the stream for you, and you should leave and be busy with your own stuff. Yeah, there are many supportive comments from Henry as well, Polish. Amazing. So many guys in here in the chat. Okay, listen. Today's merit. When should we leave crypto? Okay. I want to make sure, okay, because I'm going to share the screen in a second, and I'm going to want to make sure that you can see the screen just fine. Okay. Let's do a test. Share the screen. Okay, there we go. Please do let me know if you can see that. Okay, and also if you are able to see this one, although you are not. So I guess I'll need to just fix one thing. Wait, give me 1 second. Okay, before I share it, I want to activate my brush tool. Okay, screen brush, it's called. Okay, it seems to be just fine. Perfect. Let's go back to sharing the screen. Okay, the screen the screen is on. Okay, and we have those drawing tools. So please confirm you can see them as well, because that's the first time I'm actually using the streamer for your own convenience and streaming that to our YouTube channel. So guys, make sure you subscribe to our YouTube channel. We are kicking with brand new quality and brand new amount of the content on YouTube. Okay, so we're going to definitely need support in order to continue sharing the knowledge for free and whatnot for your own use. So here again, just quick chat in the chat. Okay, seems fine. If something just stops working, just please let me know. Okay. This is a 12-hour chart. Okay, just kind of like for your clarity, 12-hour chart. And what I didn't like about the past 2 months, as a matter of fact, since the peak in it was, what is that, like 20th of February. Okay, ever since, all the way for those 2 full months. Okay, or more than that, almost. It's like 2.5 months. We saw low momentum movement. Okay, this is low momentum movement. This uptrend was high momentum movement. Okay, so there is a difference between an uptrend, which makes higher highs and higher lows by definition. Okay, and it makes the higher highs and higher lows in a slow, kind of like a slow movement, lazy movement, like it barely makes any new highs, any new lows, right? Or just shoot straight, like vertical, like a crazy mad person. Okay, so there is difference. And this one on the right, okay, it's full of momentum. Momentum by definition is, well, this is a physical kind of like a measure, right? The physical movement measure. So momentum or impetum, okay? And what matters, see, just an example, okay? This is a physical example. So there is a small car, okay? There's a small car. Yeah, I don't know. Let's give it an R7, right? Just a coincidence. So it's moving to the left, okay? And it has some mass and it has some velocity, okay? The momentum or impetum, okay? Or we can put it as an M, okay? Or no, sorry, not M, but like let's give it as an impetum for P, stands for P, whatever. Okay, it's literally M, like the mass multiplied by the velocity, which is a vector, by the way. But this corresponds with the force. This corresponds with the effect, with the result. Okay, I'll tell you in a second how it correlates with the markets. So let's say this car, okay, is moving with the velocity of, I don't know, with a speed of 100 kilometers per hour, okay, 100 kilometers per hour, 100 miles per hour, whatever, okay, and it has the mass in 1 ton, or, well, how the R7 is actually quite a monster, it's 2 tons. And there is also a big truck, okay? There's also a huge truck, can be, I don't know, like a Tesla truck, whatever. Okay, this is like a huge truck. So the momentum, okay, of this one is going to be so much bigger, okay, despite they could be driving at the same velocity. So the mass is so much bigger, and it's not just the velocity that decides about its movement, about its result of its movement. Let's say they crash into a wall, right? If they crash into a wall, so if this car crashes into a wall, okay, generates some impact. But if this bigger car crashes with the same velocity, same speed in the same wall, this is going to get so much more devastating results, okay, because of the mass. So this is how the momentum kind of like works, okay? So you need to acknowledge the velocity, the speed, okay, the advance and of the movement and the mass of it. So here, in the finance, okay, just a quick check. Cool. Just a quick check. Seems all fine. Just a quick check. When this moves fast, okay, and it is followed by big money, okay, by buyers, by a lot of buyers, by a lot of volume, okay, then this is like this big truck. It's very hard to stop. Okay, it's very hard to stop. So in order to stop that, you need to have proportionally bigger and more significant amount of money on the other side of the table of the sellers, okay, to stop it. So whenever there is a pump, like a massive vertical pump, okay, full of growing, let's say, volume and so many buyers attracted, okay, versus this low momentum movement, let's say, okay, so it can be moving. It's literally like this truck, you know, when it literally moves like very fast, and it's full of mass, it's full of this market cap, because the market cap is like a mass for finance, let's say, okay, then it's very hard to stop, and you need very big amount of money to reverse the market. But if the trend is weak, if the speed is low of the trend, okay, if the speed is low, if the rate that it's going is very slow, okay, then even if it has a lot of mass, a lot of capital inside the man cap, you know, the market cap, it's quite easy to stop. Okay, it's quite easy to stop. That's why you often see those reversals, those low momentum movements. Okay, and this type of movement that you guys are seeing in here is a low momentum movement. It's sort of like easy to stop. It's so much easier to stop, let's say, if it goes sideways like that, than this trend. That is vertical trend. Okay, that is the technical kind of like technical picture, or the mechanism behind the market reversal. So the more, like, you always need to start your analysis with the higher time frames. Okay, let's actually just turn off the labels. Let's go for the New Year trends. Okay, there is no sell signal because the candle kind of like closed nicely enough not to generate the sell signal on the weekly, although there was a threat for that. Okay, so what you know is, let's go for the logarithm chart, or this way actually, I think is actually going to be seen better. Okay, so you saw a couple of those low momentum movements before. This low momentum movement was here. Okay, this was the low momentum movement. The low momentum movement was as well here. Okay, and then it started pumping, and there was nothing about low momentum in that. Okay, so we need to understand the differences between the low momentum and big momentum movements, high momentum. Okay, this, surprise, is low momentum movement. So each and every single low momentum movement, when it happens, let's say the market freshly reverses, just like here. Okay, market freshly reverses, then it often just pumps, and it has some disbelief, which is why it's sideways. The disbelief type you had in here. Okay, around September, October last year. And then when people catch up, okay, they understand and acknowledge that there was some market reversal and continuation and whatnot. Okay, it's starting to piling up on a momentum. And whenever there is big money dumped, because, well, again, the institutions and the big money are exactly who manage the market, who make the market reverse in either direction. Okay, so when the big dump happens, this entire uptrend of high velocity, high speed, high momentum, it kind of like is how should it, so like held back. It's like distorted at one point. Okay, deviated. And then this big significant dump, at one point it starts making people, a lot of people lose money. Okay, so it's always kind of like which I name, PTSD, like a post-traumatic stress disorder. Okay, so when you lose a lot of money, when you get liquidated a couple of times, you firstly need to understand, like you refuse to admit that. Okay, you say, no, it's impossible, like that can't be real. I need to log in, log out and log in again, because that cannot be real. I just lost so much money, and so on and so forth, right? So it's always like a PTSD effect, which you deny to accept the fact. You deny the reality. Okay, denial is the very first stage of dealing with the problems. And let's say there is some low momentum movement because of that, another low momentum movement. So you have 1, 2, okay, second momentum, low momentum movements, and then when those people kind of like shake, okay, they shake it off, you see another session and another rally, and then the pattern repeats, but the bigger volatility kicks in. Okay, because the closer to the peak market, closer to the big market, to the peak of the bull market, the bigger the volatility is. Okay, the nominal volatility, percentage-wise, it doesn't change much. But back in the day here, I can remember days where Bitcoin's volatility was $100 a day. Okay, it was literally just swinging down and up, within the distance and the base size of $100. Right now, you see $10,000 candles, so it's 10 times more than this. Okay, even more. On the reversal day, because of the volatility growing on the nominal side, you're going to see $50,000 candle perhaps. Okay, and that's not going to be anything extravagant, which is even worse. It's not going to be anything extraordinary. Okay, because if you analyze the past, just see. If you analyze the past, okay, the very first dump that happened on the Bitcoin reversal in 2017, it was a move down from 20,000 down to 11 or 12. It was about 50% decline, like 40 couple percent decline. Okay, and knowing that you guys should realize that you see 3 different types of corrections. Okay, it's a mild one, or a classical or shorter one, which is 15% downside declines for Bitcoin. You see also about 30 to 40% declines, okay, which is medium time frame usually, and this is the medium time frame, by the way. Okay, this is close to 30%. Like this entire medium the entire decline measures from $64,000 or $65,000 almost. Okay, let's just measure. Okay, the entire base size of the entire low momentum movement is 33%. Okay, so again, 33%. You see 15%, okay, which is low time frame again because it cleared, wiped it out. You see 30 to 40%, okay, which is medium time frame. Time frame is the time scope, is the time length. Okay, low time frame is anything below 3 weeks. Okay, this is well, more than 3 weeks. Okay, but less than 3 months. This is medium term. And anything bigger, okay, which is high time frame reversal, high time frame retracements, okay, which is bear markets and bull markets, let's say. Now, is anything longer than 3 months arbitrary, or this is somehow arguable, although this is what it's generally agreed, okay? And those high time frame reversals, which is bear markets, usually go down by more than 40%, okay? So it's usually like 50% to start with. But as a matter of fact, each and every single bull market cycle, okay, like you're not really seeing this one, but in 2014 you will really see this empty box collapse. Okay, this 1250 was the high of the year of 2014. February it started retracing. Okay, there was like a previous pump. Okay, from 198 in 2012, I believe. Okay, so and before that it was $32 or $31 peak. Okay, so in 2011, and so we know that Bitcoin cycles last usually about 3 to 4 years on average, and they retrace in the bear markets by about, he was the bottom of 1999, I believe, if we account and approve the empty gox, or 150, something like this. Doesn't matter much. What matters is that here we saw about 92 or 3% retracement in the bear market. This time, there we saw about 87, as far as I can recall. Now, 2018 gave us the bear market sizing, about 83, 84%. Okay, so that gives you the numbers. So you know that on average, the Bitcoin cycle lasts about 3 to 4 years, and it usually retraces. Okay, which means gives back your own profits, which are not unrealized. Okay, which are unrealized. You give back to the market about between 80 and 90% of what you earned. Okay, that's what statistics do. That's what statistics say. And knowing that, we have to make sure that we time our entries, that we don't marry the bags. Okay, if you are feeling emotionally attached to your position and you, for example, refuse to sell Bitcoin because, I don't know, somebody granted that to you, then you're going to suffer all those 90% retracements. And even if you make a couple of million, you're going to give away those couple of million, and you're going to be left with $10,000. Okay, because that's the size of the devastating result of the bear market. That's what it usually does. Okay, so Bitcoin is typical because it forms bubbles. It forms bubbles mainly because of lack of regulations, because of a very strong emerging technology, very strong emerging overall, well, I should say, civilizational progress development. Okay, you also see lack of regulations, just like I said, which they generally create this pump bubble or bubblish, like an environment. Okay, where bubbles only occur when there is no rationality. Because if there is an uptrend, which is sort of rational, what you see, okay, is you usually see the trends which are channeling, okay, be it to the downside, or to the upside, or to the downside. Okay, so you see regular price, repetitive patterns, repetitive swings, which are proportional. Okay, the moment the problem starts, well, those are not bubbles. Okay, those are usually like traditional markets. You would see that on the grains, or the corn, on the soybeans, on the food market. Okay, wheat, oats, soybeans, and like I said, and this type of assets, slow moving assets. Okay, those give you mild returns, but also mild retracements. So biggest retracements you would probably see, unless some catastrophe happens, some natural like a catastrophe, where there's a shortage of supply, okay, that the demand kind of like just pumps. but you would see like 50 to 60% retracements perhaps. So it's not as volatile to the downside. But the problem starts with the bubbles, which tend to be irrational. Okay, you know that the market is bubbling where it's refusing to follow this repetitive, well, when it breaks through this resistance at one point, you see it's going more vertical. Okay, and when it forms a new trend, let's say in here, okay, and when it pumps through the next resistance, it's going even more vertical. Okay, so pumping through those resistances, just like it pumped in here, okay, it would start going very aggressively to the upside. And when it's going very aggressively to the upside, it's causing bubbles. Okay, and people only, like, naturally when the market is challenging, you would assume that the high areas, the resistances are the place to sell. But when it breaks out to the upside, what people do think, they see the market is rallying without them, and they are just literally jumping on a train, okay, which is already heavily, like overvalued at one point. So this is like this, Black Fridays, what you see on the shops in the stores. Okay, people acting irrationally, or what you saw with the toilet paper. People were buying like insane amounts of toilet paper. Like, why? Why would people do that? And that's the point, because there are some social patterns, okay, that make you want to feel the part, you're the part of some social group, like you're the part of some club or something. It helps you approve yourself from a psychological point of view. But more importantly, this causes bubbles, okay, those upside breakouts on something that looks technically bearish, let's say. And when you see the trends which are accelerating, you see the channel, and you have to redraw those new resistances because it keeps breaking and violating those channels. This is a bubble. Okay, that's how we define bubble. Okay, and each and every single bubble retraces about 80 to 90% on average. So compare 80 to 90% with 50 to 60%. Okay, this is almost twice as big and twice as deep retracement. Again, knowing of that, we must never marry our backs. If you earned, if you participated in some DeFi pre-sales, or some DeFi coins, or right now there's a very good, there's ratings, but where did I see that? There is ERN, okay. I think you should be able to see that. By the way, let me know so far how you're enjoying the stream. Okay, just want to make sure I know. Okay, you might not be able to see it properly unless we do this, I suppose. Yes. Okay, so this is a nice example. This is a very nice example of a bubble. Okay, it's going up irrationally high and vertical. I think at the peak it made about 300x since the lowest price available to some pre-sales or something. Okay, and then in the matter of how long it lasted, since the peak to the bottom, luckily here, it lasted 1 month. And in 1 month scope, it literally knocked down the price by 82% in 1 month. So by holding that asset and not realizing your profits for 1 month, you lost about 80% or 82%. It means if you made $1 million, you just gave away, okay, just gave back to the market 800,000 or more. This is life-changing money for many people. Okay, and this is the cost. This is the opportunity cost for you marrying your backs. And crypto, because it's bubble, knowing how volatile it is, you must avoid not realizing your profits. And this is where it becomes tricky, right? So how you define when to realize your profits? Well, let's go back to those low momentum movements. The market cycles work in a way where you see, as I said, this. This is white. Where you see the participation of the mainstream in the late phases. Okay, so the reversals are usually like in the depression. You see headlines like, see, go ahead, Bitcoin depression, right? You're going to see. Let's go to the graphics, and you're going to see some headlines. By the way, this is our chart. Okay. Let's go and see what people say. This is our chart on Reddit. Okay, so somebody brought it on Reddit a year ago. Interesting. Yeah, one way or another, you guys want to see, is this the end of Bitcoin? You're going to see those type of articles. Okay. I want to see the Bitcoin articles from 2017. Okay, BTC, or 2018 article, 2018. Oh, 19. I want to see 18. Okay. Where's that? Some headlines, some super bearish headlines. Okay, you could see like Bitcoin is dead, Bitcoin dead. Okay. Oh, there you go. Okay. Right. You would see those type of headlines everywhere. Okay. Bitcoin is dead, and it's always on the bottom. It always is on the bottom. And the other way around, whenever the market pumps insanely, you see the Bitcoin is king. Bitcoin is alive. Like you would see Bitcoin pumps $2 million, $2 million tomorrow, right? You would see completely the opposite edge of that. And by those headlines, you can also navigate and use that as your sentiment indicator. Okay, those headlines of the newspapers are usually targeted at the mainstream, and this mainstream needs to be trapped. Mainstream needs to be trapped. People who are joining late, they are going to be trapped for this one reason. The big players, the big money institutions who are invested, with billions and tens of billions of dollars, to leave the market or to enter the market, they need liquidity. They need your counterparty. For them to buy 10 billion, there needs to be somebody to sell them this 10 billion. Okay, so it cannot be, because there are very few of the whales. So they have to make those poor people who are joining late whales, like a collective whale. Okay, this is a collective liquidity, because otherwise, when there is no liquidity on the market, so what happens if I wanted to buy 10 million of some shitcoin with no volume? I would literally pump the price like, by 10,000% or something, right? Or if I wanted to exit the market very sharply, okay, if there's somebody, let's say here in low momentum movement, if there's somebody who just decides to exit the market because, I don't know, for some reasons, and it dumps $100 billion in one point, okay, I promise you would see this type of candle, or maybe not this because that's a longer chart, but this. Okay, you would see a really big downside candle, and that means giving away about 30% of what you earn. So if they are playing with tens of billions, so let's say 10 billion, and they give back to the market, well, 30%, they're giving back $3 billion just of the fact of this market selling that. $3 billion. Okay, just for the sake of having no liquidity. Okay, so what they do is exactly what you saw in here. Okay, so what they did is they made you believe that those breakouts, let's say you had the high marked, okay, then you had the low marked, you had a higher high marked, so you could technically believe that whenever there is a signal, whenever there is a rejection of a resistance, and whenever it breaks out, you could assume that the resistance should hold. Okay, and when it's in the decision zone, when it's about to decide right there, whether it actually is going to recover and continue upwards or decline. Okay, this is the tricky part. You would anticipate many buys in there, but then that everybody is buying this breakout because it looks bullish, right? How the not smart, how the dumb money thinks is the farther and the higher it goes, the more bullish the trend is. The wise money thinks in a way, okay, this trend has been lasting for such a long time. Okay, we made like multiple grants, multiple X's, multiple multipliers. Okay, we have to leave the market. Okay, and this is what the wise money thinks. The down money thinks. Okay, it's pumped 500%, 5,000%, 50,000%. It's so bullish. It needs to continue like this forever. Okay, and that is exactly this type of thinking which makes those poor people who had just learned, what Bitcoin is, literally market buy and go right away and buy the very peak. Okay, but this is needed, and they only buy those peaks because they heard in some fancy TV station media, okay, that they that Bitcoin is going to go up. Okay, or you read in this newspaper headline that Bitcoin is dead. Okay, or Bitcoin is going up to millions, so I better buy that. Okay, so that's what happens. Again, you saw a high, low, then okay, it broke out, but instead of pressing upwards and continuing, it faked it out. This is a very first signal of the market weakness. If it fakes out and if it does not hold this support, okay, then it means that this entire area was just for sellers. So this entire area on top, okay, was just for sellers. Then you also saw this same case, okay? See, notice the breakout followed by a fake out, making it a fake breakout. Another resistance break in here towards $65,000, another breakdown, okay, another fake breakdown. So we had two subsequent fake outs. This is typical to distribution, okay? Because those fake outs, those very fake outs are, I'm not sure I can do a rectangle, I think I can. Those entire, fake out, this entire fake out, like a zone area, is filled with sellers. And this is where the wise money realizes the profits. Okay, if you see repetitive, market weakness for low momentum, okay, the market cannot hold the new supports. Instead, it breaks them down, okay, and then it repeats, gets a new resistance, new breakout, okay, and repeats the same formula. Then again, this entire zone is filled with suppliers, with sellers, and this is bearish, okay. But again, this is bearish in its own neutrality, because the sideways trend is by definition neither bullish nor bearish. This is neutral, but this neutral needs to be put into context, and this context is that we have been in a bull market for quite a long time already, for 3 years. So each and every single low momentum movement you see, let's say this, okay, you see those low momentum movements here, okay, here as well. Now, like here at one point, okay, those are low momentum movements. Those are the trend interruptions, okay, the market taking a breath. And the more of those you see, 1, 2, 3, then each and every single next one that appears, and each and every single subsequent one that appears, gets you closer to the market peak. And at one point, this is going to be the market peak. Okay, so again, knowing of that, you can choose to follow the technical analysis, right? So the more fake outs you see at one point, I would personally assume and expect that this very low momentum movement you see again in here is one of the final ones. I think that you're going to see this kind of like what last final one, okay, somewhere around here, and it's going to be the last one of this bull market. Okay, so all this time since the bull market reversed on the bottom, so there was a bullish market reverse on the bottom. Okay, if you just joined, then you already missed it. Okay, then you already missed it. And if you missed it, then you have to realize that there's only so little time left for you to be profitable. Because otherwise, if you keep buying somewhere over here, then for most of your time, you're going to be underwater heavily. Okay. Okay, quick check. Yeah, so the technical way of understanding when the market reverses is the momentum. I explained the physics, let's say, of the momentum, the overall principle of how it works. Okay, and it works exactly the same in finance. So If you see many like subsequent low momentum movements, again, here, here, okay, here, there you go, or here, okay, then each and every single one that appears and lets it be sideways could be the sideways, could be the distribution, okay? And because if you think about it again, sideways is a battle between the bears and bulls, the sellers and the buyers, and the distribution and accumulation is like a mix. It's like a mix of that because it accumulates. Traders accumulate the range lows and then distribute the range highs. Okay, that's the way you can trade the range, and that's what it happens. So each sideways like this, okay, low momentum movement patterns, every chart pattern, let's say, head and shoulders inverse, right? Like shoulder, shoulder, head. This is no downtrend, no uptrend. This is sideways. Anything that is not classified as an uptrend or a downtrend is just a sideways, and it can at times occasionally form chart patterns like triangles, okay, like some wedges, like this, when they contract, or some pennants, some very brief interruptions in the vertical trends, and so on and so forth. So all of those patterns are low momentum movements. Okay, they are not part of an uptrend or or downtrend. Each sideways brings the risk of being the reversal. Okay, so if you see this one, then this one, then this one, then usually, well, the fourth one, okay, is like a big danger. Okay, I would never feel comfortable in my longs while observing the fourth or the fifth, low momentum movement in the entire bull market cycle. Okay, so knowing the momentum principles can let you exit the markets. So just by the simple count of how many sideways you saw in the bull trend, that's how you also are going to know, that usually it's about between 3 and 5. Okay, any more is literally telling you that big money is aggressively leaving the market. Okay, so there is the technical aspect of that. Of course, you could also trade the so many different techniques, right? Which is the moving averages. You could trade the Bollinger Bands. You can trade the Ichimoku or Burbicular approaches, like you see in the chart. Okay, or you could also be not momentum trader, but a volatility trader. Okay, so as I said in the beginning, apart from the momentum, you know about the moving averages. You also know about the volatility. So the volatility always peaks at the market tops. Okay, the volatility is the biggest. So what are you going to see on the reversal day to the bull market? You're going to see vertical pump, then vertical dump, about $50,000 candle to the downside, most likely on the reversal day, assuming we top out somewhere around $90,000 to $120,000. You're going to see literally like $30,000 to $50,000 to $40,000 candle in one day downside. Then, because it's a huge volatile, it's like very, very vibrant, the vibrations are very large, the amplitude is huge, which is you're going to see a very sharp recovery as well. And this recovery is going to be followed by another dump, okay, with breaking down below the support. And that's where things go hard on you. That's where, at this stage, in a matter of a couple of weeks after the bull market tops, you are already down 60 to 70%, or 60%, let's say 65. Okay, so you have just given back to the market about 65% of what you earned. If you earn 10 million or 10 billion, you're going to give back 6.5 billion. Okay, that's just give you the numbers. Then sentiment, right? I mentioned technicals. I mentioned the sentiment. How we can know? You can also know based on the fundamental analysis, or should I say on-chain in this context, right? So let's go for the NUPL. I keep talking so much about the NUPL chart. So many kind comments, right? I appreciate it. So many kind comments, guys. Yeah, you literally are seeing here, okay, the chart which is called net unrealized profit and loss. I actually hosted live trading stories. It was 26 episode on our Instagram, official Instagram. By the way, kind reminder for those who are watching us on YouTube, make sure to subscribe. It's free and it's going to keep you reminding about all of the upcoming live streams, because not sure you know, next Monday we're starting 14-day free trading congress. Okay, 14 days free premium membership. Okay, you're joining the biggest trade group probably in crypto since 2017. We have been through the ups, we have been through the downs. 99% of the other competitors, all the trade groups just disappeared, exited, scammed, or they didn't survive the bear market. Okay, and the nest is insanely grown already. So we are definitely getting ready for the bear market, which is coming. Okay, it's coming sooner than later. And this on-chain kind of like tracking, this on-chain tracking by the NUPL, okay, the entire on-chain, let's say with the hash rates and whatnot, but this setup with the NUPL, it compares, it gives you the ratio between the net unrealized profit and the entire market cap. Okay, so it tells you, let's say if it's 0.75, which is three fourths, 3 out of 4, okay, it tells you that 3 out of 4s of the 4 parts, 75% of the entire money in crypto is being unrealized. 75% of the entire crypto size as a market financially is being there in the pool, the liquidity pool on the table. Okay, it's just like a loot that you can take. And I promise you, this loot is going to be taken, which is historically exactly why Bitcoin had seen so many reversals on the very euphoric days, the very euphoric weeks. And each and every single time historically the Bitcoin sustained or was above, the ratio of 0.75, which is 3/4, okay, 75%, it reversed. And have a look. This context, this market context, reminds me so much of what we saw in here in 2017. Okay, the sentiment as well. I can remember the summer of 2017. Bitcoin retraced from $3,000 down to, or from $2,800 to 15 or to 14, something like this. Okay, $100, and people were feeling upset. People were extremely bearish in that. They were thinking, the bull market is over, and exactly the same thing. Just look at this. Okay, go ahead and let's Google the Fear and Greed Index. Okay, well, right now it says it's 51, although where that was, there you go. It was 27. Okay, it was 27 just 4 days ago. So that was literally the market local, the market bottom. Of course, the market bottom is usually when the Fear and Greed Index bottoms out or just declines sharply. You also saw the very big greed up on the scale in July. Okay, or June, July 2019, when the Bitcoin was about $14,000. Okay, it was a peak. I'm not sure you can see that. Okay, it was this peak. It was extreme greed on the market. So whenever this sentiment indicator indicates to you that there is a significant bottom or a significant peak, okay, then it usually is when it reverses. So again, now it is actually about 51. It recovered smoothly. It recovered fast. Okay, although literally the past month, okay, just presented you with going sideways. The sentiment goes sideways. Because the market goes sideways, and then a sharp and heavy decline. People were feeling super bearish about that, and each and every single downside spike, let's say, bearish decline, very sharp decline on the Fear and Greed indexes as well. The sentiment indication of the market bottom locally. Okay, so knowing about the sentiment part and knowing about the NUPL, okay, which corresponds somehow to the on-chain analysis as well. So that you track the wallets, how much money, with the on-chain tracking, how much money is being unrealized, is being in the positions actively. The positions are open, and you exactly know how much money is being left in the loot on the table. And this loot is literally what the big money, what the players, what the institutions, what the whales are going to take. of the table. Okay. So historically, just pay attention. Historically, the green area, okay, have this has always been of some very good reason behind taking profits. Okay, behind taking profits. So this time, that, and that historically have always been, all those times have historically been about taking profits. But this difference is that those taking profits right now are, when you compare that with, let's say, move it to 2000. There you go. Okay. This and that. This is very similar in the sentiment. This is very similar in the price action. Okay. People who are joining late, who are joining new, freshly, they think they're the best traders on the planet because they make a bet very quickly. Okay. But just as a matter of fact of being, there's a thing called first timers luck. When you have no idea what you're doing, but you somehow win. Okay, it happens to everybody, but luck, you cannot base your strategy with your money on luck. Okay, as a trader, you have to base your trading strategy, your system, your money kind of like a management based off the high numbers, based off the probability. Okay, if the numbers work against you, if there are so low chances about winning a trade, then 99 cases out of 100 you're going to lose the trade. Okay, so numbers and odds must be in your favor. And again, historically, this lazy area, okay, or should I say this sideways in the NUPL ratio, okay, came with significant reasons to take profits of the market, which is exactly why I keep selling Bitcoin on average. Okay, it's not that I'm just market selling actually, because as a matter of fact, if the daily closes in a bullish manner, okay, I'm going to see, this is not the time for not the fit of mine. I play with default on 12 hours, okay, and I patiently wait for the market signals. So if it closes bullish today, okay, you're going to have the buy signal on the Bitcoin, and I'm going to follow that in respect. Okay, this may or may not take us, if the trend is going to be sustained, as you know already, okay, if the trend is going to be sustained with the high, and if for the first time the high is not going to be, disrupted to the downside, broken down, but is going to remain, followed by a higher high, this may actually take us to the final stage somewhere, okay, like between $90,000 and $120,000, because I honestly have, I'm quite sure, although you can never be sure or certain, I'm quite sure out of my experience that we most likely we are not the top yet. We haven't seen the top yet. That's not how the tops look like for Bitcoin, okay? Tops for Bitcoin are full of euphoria and spikes and very aggressive volatility. That's not that. That's not how it looks. So we are missing this last final spike. If you're Elliott wave practitioners, okay, then you could practically call that to some extent probably like the fourth wave or something. Okay, it's like the final corrective wave, the market taking a breath, secondary, movement, deviation before the final spike. Okay, but still, this is taking profit. Sideways happens because people take profits, because the big money takes profits, which you exactly see in the green area in here. Okay, the green area. And whenever it turns blue, whenever it goes above, 0.75 as a ratio, whenever there is more than 75% of the entire market cap being unrealized in the loot on the table, the liquidity pool, I'm going to aggressively scale out. Right now, I'm moving slowly, okay, based on the, here on the on-chain indications, the sentiment indications, technical indications, okay, intermarket correlations. And that's where it actually becomes interesting as well, because if you go to the trend spider, okay, you're going to see you're going to, thanks for the kind of words, guys. You're going to see this probably best looking charts I've seen in years. This is best looking chart I've seen in years, literally. Commodities. This is a Bloomberg commodity index, okay? And Bloomberg commodity index represents the entire commodity class, okay? And commodity class is, if you go BCOM, okay, very quick kind of like a check for you. Okay, you're going to notice that there are a couple of groups. You can see the energy group, which goes mainly with the by the percentages with the crude oil, natural gas, and the Brent oil. You see the grains, which is the food market, like I said, corn, soybeans. Okay, you see industrial metals, which is copper, aluminum, copper with the biggest kind of like participation and the weight. The precious metals, gold and silver. Okay, which I'm a huge fan of. Softs like sugar, coffee, and whatever. That's some livestock. What matters the most? Okay, what matters the most for the entire commodities as a whole is percentage wise, if you think about it. Okay, it's gold and silver, or primary gold. There is no other market, no other asset class as like of as high weight as gold. Gold stands for 13% or more, almost 14% of the entire participates in the 14% of the entire result of the commodity index as a whole. And check this out. This is a 50-month moving average. Of this yellow curve, this orange curve. Okay, this orange curve in here. Boom, 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 boom. This is 15-month moving average. This is average price, average worth, average value of this index out of past 50 months. That's a lot. That's a lot. Okay. And this breakout that we saw in here in February is the first breakout, first successful breakout ever since this. Okay, which is 2012. So it took 9 years to see this breakout. If you are serious about your money, guys, you cannot ignore such signals. This is the first time in 9 years in the past that commodities broke out technically above the average value of this index. And you perfectly know probably how big of a fan I am for silver. Okay, you probably also know how big of a fan I am for gold. And that's where my money is going as well. Whenever I take profits, I make sure to equip myself with gold and silver. And because of this chart looking so amazingly, I know that, and also Jay Powell, with the Fed's conference recently just confirmed that they're going to boost the inflation. So by boosting the inflation, it means they're going to continue printing so much money, the cash, the currency are going to become worthless in order to transition to a new monetary system in about 10 years of the digital currencies and full invigilation and whatnot. Okay. They need to crash the currency system first, so the people will stop believing in that. Okay, and if they stop believing in that, it will be so much easier to propose new scenario, new solution that the digital currencies of full control will be. Okay, that is what's coming. That's what World Economic Forum already announced as the agenda for 2030. And commodities are going to be probably in hard assets like real estate, lands. See what Bill Gates did. He had just literally become the biggest farmland owner in the US, at least if we are to believe the records. Okay, so the big money is big, not like they are big because they know what they are doing with the money. So if you watch them, okay, closely, they literally are setting the trends early. Okay, for that reason, commodities and hard assets, not paper assets, not stocks, no derivatives, no contracts, no options, perhaps as well. Okay, no papers are going to be safe. Most of the derivatives, most of the contracts for futures, forwards, or options are actually not backed by metals. If you play COMEX, commodity exchange, the biggest commodity exchange on the planet, most of the contracts for gold and silver are actually not backed by the metal. They produce bigger amount of contracts and papers than they have gold and silver in the actual store to back it up. Okay, this is of course scam, but well, somehow government can print money endlessly, and you try printing money and they put your fucking ass in jail. Okay, so that's how this works. So what I'm saying, guys, is you have to kind of like wrap it up because we're coming to kind of like slowly to an end. to wrap it up, you have to take your profits. You have to realize your profits. Okay? You have to respect the fact that it is, as a matter of fact, good time historically to at least book some profits. I bought RS7, guys, okay? Not like as a gift for myself spontaneously as well, okay? But I'm realizing my profits, right? I don't buy gold like, Rolex watches because I like watches, but because I want to realize profits and put it in something that appreciates in value, perhaps to some extent. Okay, you have to take your money of something that is overvalued and put it into something that is undervalued. You have to take some of your money or out of crypto at one point, okay, and put it into something that is extremely overvalued. And I promise to you, okay, right now, here, I think we are looking literally at the start of the entire bull market era. And this most likely much bigger than ever before in history. Okay. And nobody probably would believe me that, or few people would believe me that because, well, the trend is so early, so it's not looking bullish because the trend looks most bullish when it's actually on the top, right? Which exactly what makes people buy the top. Long story short, keep your assets moving. Intermarket correlations, intermarket analysis also shows you the correlation between Bitcoin and commodities. Okay, and you know that the currencies are going to depreciate in value because of the inflation as well. Okay, they literally told you that the inflation is going to be boosted, but they're never going to kick this back. They're literally going to keep inflation flowing because that's a very good excuse for them to later transition to new monetary system as a whole after currencies have dropped about 100% of the entire value. And slow control hyperinflation occurs just like it just like it did not happen in Zimbabwe, right? Because there was nothing about the control back there. Yeah, that's my message, guys. And right now, let me know, please. Let me know, because there are so many comments, so many channels. There's a question. Let me take a few. Okay, Bert, why wouldn't BTC keep rising in an inflationary environment? Bitcoin is a deflationary asset as it is deflationary. Okay, its technology, its blockchain technology was set to actually have deflationary model, so you cannot print that. Inflationary model, like it's not the question for why you cannot rise. It is actually rising because you guys see. 1 second, you guys see. By the way, how dark it become. You guys see that, well, we are in the very inflationary environment, and Bitcoin has been nothing but growing for 3 years. So it is growing, okay, already. But more importantly, you have to respect what's on the left. If some assets pump, just like go back to the very beginning, what I was discussing. If something pumps, 10,000% or something, or 100x or 10x, it's a lot. That traditional markets, traditional people don't see that for decades or for multiple decades. When you see that in a day or in a month, there's nothing about stability in here. Okay. There was a question from Francis. When I join Burb Nest, it's the Burb Nest. Will we know when the bear market is here? Of course, you will. Right? I'm going to tell when the bear market comes. I've been through that. I've been through the bull markets. I've been through the bear markets. I perfectly know how it looks, which is exactly what I'm slowly taking profits and realizing that because I know the bear market is coming. Okay. There is which platform would you recommend to trade commodities? So you can trade, well, you can buy physical gold and silver, which I'm doing. You can also play contracts if you don't wish to accumulate physical metals. Although I highly recommend physical metals and hard assets rather than paper assets. Go for Prime XBD, in my opinion. We're good, very good friends, and they are very, very solid. This is off the scale educational. Thanks, John Dingwall, for that. What do we have more about this before we disconnect? There's Shimon. I think he's Polish. I'm Polish as well, so thank you for that. Guys, I've been watching Bert from 2018. He's the best trader and the best teacher I've ever known. I appreciate that a lot. Can't believe there's less than 250 viewers on stream for this quality. Yeah, guys, make sure you put a thumbs up, by the way, right? This boosts the interactions. Like, despite I have 250 on, well, 230,000 plus followers on Twitter, I'm pretty new to YouTube game, so I think you have to, if you appreciate all that I shared with you guys, you have to put a thumbs up. Put some of your comments, some questions if you have any, and I'll make sure to follow up on that. Okay. Last check. There is mm, 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 mm. Yeah, there is one thing, guys, I want to leave you with. Okay, because I need to be running. Uh, as I said, we are starting. We are about to start in 4 days from now. Dzięki, Peszek. 14 in 4 days from now. Okay, in 4 days from now, guys, we are going to start 14-day free trading congress, as I said. Okay, so what I want you to do now, if you are serious and if you enjoyed this webinar, you're going to have multiple of these each and every single day for the next 14 days, starting from May 3rd, for free. Okay, that sounds like a good deal to me, in my opinion. And to be able to get and claim that, because the number of seats, the amount of seats is limited. And guys, I want you right now to go to my website. Okay, go to theburbnest.com. Theburbnest.com. Okay, I want you to go there, and I want you to wait for the pop-up. It's actually starting in 3 days. It's Friday today. That's right. I lost the count already. Okay, the seats are really limited. The seats are really expiring. Okay, this shows the real expire kind of like status. So this pop-up, if you click on that, it's putting you for the sign-up form. Okay, so you only need to put your email address and your email. Okay, highly suggested you put a mark for the newsletter, because for the newsletter you're going to get all the links and everything. Okay, and you book your seat, and you become the part of the Congress. 14-day free trading Congress, multiple professionals, multiple traders, myself included, my entire 15 people team, institutional investors. There are going to be, hopefully, as far as I know, at least they are scheduled, some CNBC people coming up. Okay, it's 14 days free, 14 days of free premium membership in the Bourbon Nest. Okay, which you guys are going to have. And literally, like, all those channels, there are so many of them, all those channels, okay, 14 days in, well, the biggest, the largest, and the most reputable trade group in crypto since 2017 in the Bourbon Nest. You're going to get it all for free. No credit cards required, no anything. It's fucking free, right? Like, if that doesn't sound fair to you, I don't know what to tell you. Okay, so go ahead, make sure right off the stream, okay, right off the stream, make sure you go ahead and book your seat before it actually really expires. And what else? What can I say? You are going to literally enjoy 14 days for free. Okay, if you want to know more, just drop me a DM on Twitter. Okay, and I'm going to provide you with some links. But I definitely want to make sure, guys, that you get your links. Okay, theburbnest.com. Theburbnest.com. Go for it. Okay, go for it, and you are going to get 14 days free. And the best people, and the best knowledge hub, and the best trade group, the largest trade group, and the most reputable one. Okay, I myself, I'm a certified technical analyst, which you're not going to find many of those. So I'm very happy to keep sharing those with you. Make sure, guys, to put a thumbs up, to put some comments, ask your questions in the comments on the YouTube, to make sure to follow that YouTube or subscribe, should I say. And guys, what can I say? God bless you, and I see you very, very soon in the Congress. Cheers. Bye.